السلام عليكم ورحمة الله بسم الله والحمد لله والصلاة والسلام على رسول الله اللهم علمنا ما ينفعنا وانفعنا بما علمتنا وزدنا علما. Hello everyone, this is Liquidity Club by Ahmed Shawi. Today is Sunday, the 27th of July 2025. It's been a while since I've posted a weekly review, but we're back in the game. You'll be expecting me every Sunday with a weekly review covering the majority of the asset classes out there. And I'll be giving you a rough estimate on what I think the price is or what the market's going to be drawing towards most likely. So starting with the XY here, we have the weekly time frame chart. As you can see, we've been dropping down lower. If you actually go back to the first weekly review of this year in January, the first weekly review, the very first one, I mentioned that I would want to see DXY to drop down lower. We're not even there. You can check that weekly review. It's pretty much a major outlook for the whole year. You can always refer back to that one for you to actually know where we're going to with DXY. So we have a sell side liquidity here. We've been in a sell program. We don't switch sides out of nowhere. No, we're always with the program. It's a sell program. We're not switching it. We're not looking for longs. Nothing like that. We're sticking with the program and the ongoing program that's going right now. It's a sell program. So we're looking for any retracement. It's just a retracement, and we'll be pushing down lower towards the sell side liquidity. As you can see right there, we have a sell side liquidity here that I would want to see price push towards next week. Going to the daily time frame chart, you can see how price traded up higher, found some resistance here, and started breaking down low. We have a favorite gap here. I'm looking at this favorite gap as price wants to retrace up higher here, and then from here we can push down lower towards the sell side. That's it. So that's how I'm looking at. We have a volume imbalance here as well. Look at this volume imbalance as a means of a resistance, as an inversion volume imbalance. The price will find some resistance here before dropping down lower towards the sell side. So that's gonna be pretty much it for DXY. Going to EURUSD, also known as the fiber, here we're viewing the weekly time frame chart. As you can see, price has, conversely, when we talked about the XY dropping down lower, we're looking for EURUSD to push up higher to the buy side liquidity. So we have a favorite gap here. This is internal range liquidity, a busy buy side imbalance, sell side inefficiency. So it's inefficient with sell side delivery. From here, we'll be looking for price to push up higher here towards the buy side liquidity right there. Going to the daily time frame chart, you can see how we have small favorite gap here. Price might retrace towards that favorite gap and then run up higher. So we're looking for Monday, Tuesday forming the low of the week, Wednesday, Thursday, Friday. This is what I'm looking for. We're looking for a retracement first and then running up higher towards the buy side liquidity throughout the week. So that's going to be pretty much it for EURUSD, or also known as the fiber. Going to Pound USD, here we also known as the cable. Here we're viewing the weekly time frame chart. As you can see, it's a bit lethargic here on Pound USD or GU. It's a bit lethargic. We traded down, took out a sell side liquidity right there, and it looks like we might enter into some kind of state of consolidation before we might run up towards this buy side liquidity. And if this is actually a change in state of delivery, where price would want to change, to shift the program from buy program to sell program, price might leave this intact, the buy side equity. Whereas on EU, next week we might take it up, but Pound USD might just leave it intact and then drop down lower, trade down lower. So once we trade down lower, below this low, we'll be looking for price if it wants to actually change program, shift towards the sell program. But until now, we're looking for high prices towards the buy side liquidity. Going to the daily time frame chart, you can see that price has swept, taken out the sell side liquidity here. From here, I'm looking for price to pretty much just run up higher. We have a favorite gap here, that potential favorite gap that can form here. We're looking at this as an inversion favorite gap that can run up higher towards the buy side liquidity. So that's gonna be pretty much it for Pound USD, or also known as the cable. Going to XAU, or also known as gold. So it's been interesting for gold lately. We've been consolidating for a few weeks now, as you can see. Ever since mid-April until now, we've just been in consolidation. And this is normal, the market is just always moving from buy program, sell program to consolidation, which is normal. But if we look inside this consolidation, we can see that we have a high here. Price has swept this high. When we're looking at consolidation. Price is gonna be taking a buy program. It's gonna be taking a buy side liquidity and referring back to the middle of the range, taking a sell side liquidity and going back to the middle of the range. So we have this range from this low to this high now, and price didn't even reach towards the. You see, we took out the high here, thread down to the middle of the range, and we retraced a little bit up here. The buy side liquidity has been targeted here. It has been attacked. So we're looking for sell side liquidity to be targeted. As you can see right here, we have sell side liquidity. That's what I'm looking for. Price to trade down lower. We have a long premium wick. I want to see the constant of that premium wick to be respected before we drop down lower towards the sell side liquidity. Now, if you view it on the daily time frame chart, you can see buy side liquidity has been swept right there, and we've been pushing up higher. Buy side liquidity has been swept here as well. So we broke down low. We have a favor gap here, the busy. We broke below it and we closed below it. So this is now an inversion favor gap. We'll be looking for its price wants to retrace up higher. We look for shorts here that can push it. We even have a SIB here, the sell side imbalance, buy side inefficiency. So it's inefficient with the buy side delivery that can push price down lower. You can see that we have here sell side liquidity that's resting. We have this sell side liquidity as well. This sell side liquidity as well. So we have a lot of sell side liquidity that's resting here that I would want to see it trade down lower towards these levels right there. So that's gonna be pretty much it for gold. Going to ES. Here I'm viewing the continuous contract and I'm viewing the weekly time frame chart. As you can see, we're trading at the all-time high at the 6.4. We closed last week at the 6,425 level even. Next week, I'm looking for, so whenever price has swept buy side liquidities and we're trading up higher, we want to see price retrace into some considerable amount of levels that can pretty much provide the marketplace with liquidity that can run up higher if it wants to run up higher. So if, let's say, we're in a buy program here, we want to stick with the buy program, but if in order for it to be in a buy program, it has to retrace into some levels that it can provide for it some term of liquidity that can push price up higher, even higher. So from here, price doesn't even just like keep drawing up higher like this. No, it has to go up higher a little bit, retrace, run up higher, retrace. This retracement is to provide liquidity and to engineer liquidity into the marketplace. So how can we engineer liquidity in the marketplace here? If you ask this question and you're as a market maker, you'll be looking for price to trade down lower towards this favor gap, to engineer liquidity, to trick people that and thinking that, oh, now we'll be starting the sell program. But when a matter of fact, when people are looking at it on the lower time frame, they're thinking like we're shifting programs from buy program to sell program. But when you zoom out and you look at the weekly time frame chart, you see that we're only retracing to a favor gap here, this BC, that can push price up higher towards the higher levels. That's it. So going to the daily time frame chart, you can see we have sell side liquidity testing here, just above this favor gap. So I'll be looking for price to trade down lower, take out this liquidity pool here, reach to this favor gap, and then from here push up higher. Again, we're sticking with the buy program. We're not trying to be extremely clever by trying to expect, oh, what is gonna be the is gonna be a switch to, no, we're not expecting anything. We're sticking with the program that is ongoing right now, which is the buy program. So retracement here into the sell side liquidity and the favor gap. That's what I'm thinking. And that's going to be pretty much it for ES. Going to NQ, here I'm viewing the continuous contract and I'm viewing the weekly time frame chart. The same thing is mentioned for NQ, a retracement towards the favor gap right there. Going to the daily time frame chart, you can see how we took out the buy side liquidity. If you compare to ES, we also took out the buy side liquidity right there. So we took out the buy side liquidity here. We break down lower here. I mean, if we break down lower below this low, this is enough for me to know that we're driving towards this low right there. Because we have here a bearish breaker, and if we have a favor gap here, you can be looking at a unicorn entry model short. Not a financial advice, do your own research. So from here, we're looking for shorts towards this low. We have equal lows here as well. This favor gap, the weekly favor gap. So I'm looking for a retracement down lower into the favor gap. I don't give a shit. I don't give a fuck where the price is going to be driving towards after it drives towards the favor gap. That's my concern. My concern is, where is the next move? Where can I make money? That's it. I don't give a fuck where the oh, in a year, I think price. Yeah, I do these kind of videos. I mean, if you refer to the first weekly review in this year, I've talked about where I think price is going to be driving towards for DXY. And this is a major outlook, but we're talking about how to make money. We're not talking about just major outlooks, quote unquote. No, we're talking about how to make money. You refer and you mention and you just be concerned about the next move. What is the next move? Where is the next move that you think price is going to be drawing towards? You don't think that, okay, I think we're not chart artists. We're not trying to draw on the chart and all of this bullshit. You see, there's not a lot of levels here on the chart. I'm not trying to be an artist here in this field. I'm not an artist. I'm a trader. So being a trader is different than being an artist. You know, like if you follow other traders on the social media, they'll be having a lot of shit on their charts, which is bullshit. You know, you're not following traders for their artisan, like their arts. No, we're doing trading to make money. So you don't make money by drawing on the chart and make it fancy and oh, you see these lines, you see this shit. No, we're not like you can even see the colors. Like it's all black and white. That's it. So stick to what makes money. Don't stick to like art and chart artists or what the fuck you're looking for. You want to make money, yeah? Be concerned about what is the next move. Where can I be betting my money on? That's it. So I'm betting my money that price is gonna be drawing at least towards these relative equal lows right there. Anything beyond this relative equal lows, if it's animated, I'm looking at this low. Below this low, we have this favor gap. This favor gap has four levels: the high, the quadrants, and the midpoint. So the high, the quadrants, the 25, 75% level, the constant quadrant, and the low of the Fibonacci gap. That's it. These are the levels that I'm looking for in terms of the Fibonacci gap. That's the stretch of my move. That's it. It's the first target. Looking at here, looking at Fibonacci gap. Once we trade to the Fibonacci gap, I don't give a fuck where the price draws to. I don't give a shit. If we do move on Monday, just one single candle we trade towards the Fibonacci gap. That's it. I'm done by Monday. That's it. So going to next week, I'm just looking for ways for me to go short. I'm looking at the 15 minute time frame. I'm looking for price to manipulate the market by trading up higher above a buy side liquidity and then breaking down lower. It's very, very important. You look at the 15-minute time frame chart. You wait until 9:30 opening time and you look for some kind of a manipulation to the buy side liquidity. Once we have manipulation to the buy side liquidity, and we have a shift to the downside, a market structure shift or a change of state of delivery or whatever you want to call it, you go in short and you target these levels. That's it. That's it. That's what you gotta do. That's it. It's easy. But although it's easy, not a lot of people are willing to commit through it. People are thinking that, yeah, I know where's the draw on liquidity, I know my entry model, but they still fail because they are miserably shit at this trading field, you know? They just want to, they're just artists. They're not traders, you know? And I'm trying to emphasize the point that you are a trader, you are here to make money. You're not here to make the chart look sexy and clean and fancy. We're not here for this shit. We're here to make money. So if you're here to make money, you have to stick to the shit that can make you money. You're not gonna make money by drawing on the chart. You're not gonna be doing that. You make money by knowing where's the next target that I'm looking for. That's it. That's the target. That's my concern. If I fail, I don't give a shit. I mean, that's the part of the game, you know. At least, I'm sticking to my word that I'm looking for shorts. I'm not changing bias midweek. Nah, I'm sticking to my bias. I have a bias in mind. I have a narrative in mind. I have a storyline. I have a story narrative that I'm looking for price to be unfold in the price. So if I have this in mind, I want to see it unfold on the chart. If I'm wrong, that's it. That's part of the game. You can be wrong. That's a, just that's part of the game. That's part of the business. That you're gonna fail sometimes. It's alright to get the narrative wrong. That's alright. You're getting experience. I mean, if you go back to the first weekly review that I have on this on this YouTube channel, you see that I do sometimes get it wrong, and that's absolutely alright. That's alright. I'm not here to show you that you'll always be right. You'll always be perfect. No, no one is perfect in this world. Yeah. If someone tells you that, oh, I'm perfect, I have 100% win rate, they are full of shit. Yeah, you heard me. So that's what I'm saying. I'm sticking to my word. That's what's important, right? You're sticking to your word. You're thinking that okay, I want to see price trade here. That's it. If it doesn't trade here, if it just kept up trading up here, I don't give a shit. I'm looking for shorts next week. That's it. On ES and NQ, I'm looking for shorts. So whatever happens, if it keeps trading up higher, in a matter of fact, if let's say next week, Monday, Tuesday, any day of the week, we've seen manipulation to the upside and we price broke down lower amongst shift and I went short and it failed and it just kept trading up higher and running up higher. I don't give a shit. I took a loss. You gotta swallow it like a fucking medicine and you enjoy it. Yeah, you gotta journal it and you'll be looking back at it. That's it. That's it. That's the game. That's the name of the game. So if you're willing to play this game, sign up. If you're not, then get the fuck out of here. Stop wasting your energy and your time and your efforts on something that you're not willing to do. Right? You have to be disciplined in this game. It's not about it's not about quick get rich quick scheme. Yeah, you have to put in the time. You have to put in the energy, and you have to be committed to this. You have to be disciplined. Otherwise, that's a waste of time, waste of energy, waste of efforts. All right. So anyway, that's gonna be pretty much it for this weekly review. I really hope you found this one insightful. Until I talk to you next time, be safe. Wassalamu alaikum wa rahmatullahi ta'ala wa barakatuh.